Hello everyone, welcome to my channel Germain Talks, and I hope all of you are doing excellent. Today I have with me Dr. Mamdouh Salameh, who is a visiting professor of oil and energy economics at ESCP Europe Business School, London. Welcome to the video, Dr. Salameh. How are you doing?
Thank you. I am doing very well and waiting for your questions.
Okay, thank you. Dr. Salameh, we are now in COVID crisis, and like in one of my earlier video, I said that most of the commodities are hit due to COVID. Oil, of course, we cannot escape. Like even oil has not escaped that thing. But how do you see oil being hit right now? Uh, what do you see the future of the short-term future of oil prices and the the longer future of oil exploration and midstream and oil consumption in general?
First, let me mention something about the COVID-19 outbreak. In my opinion and my experience, its destructive power possibly has been far, far bigger than the 2008-2009 financial crisis, and furthermore, might have matched the destructive power of the Great Depression of 1929. No industry in the world has escaped it, and the oil industry is not an exception. Of course, because of the coronavirus, there was a destruction of global demand for oil amounting to more than 30% or 30 million barrels a day if you take the fact that 2019 oil consumption was 101 million barrels a day. So a destruction of 30% means just over 30 million barrels.
Per day.
That paralyzed per day, that paralyzed the global oil industry and made it worse by the fact of the lockdown globally, meaning that the majority of people wouldn't drive nor could fly. And that has affected very adversely the global demand for oil. Now, with China bouncing back or rebounding, it is leading the world into the pre-coronavirus levels of consumption and demand.
So that's something to
And
be
of course, that's fantastic because China, where the coronavirus started, has managed to steal a march on the world and exited 2 months earlier than everybody else, which means that because of that, I always said when I have been asked in interviews, how do you reckon the global demand will be? I used to say, I consider it like a patient who has been put in isolation and deprived of food. For when you get him out of the isolation and put food in front of him, he will eat very rapaciously. And that's what's happening with China. For instance, their crude oil imports have broken all previous records in its history. In fact, in the first 10 months of this year, and despite of the coronavirus, the China's imports were 10% higher than the first half of 2019. Furthermore, many analysts were talking about a destruction or a shrinking of China's GDP by 6% during this year. Now we're getting figures that not only China's GDP will recover to 2009 levels by the end of this year, but it will grow at 6.8% next year compared with 6.1 before the coronavirus in 2019. So, and with the easing of the lockdown in various major economies in the world, I can see that the demand for oil in 2020 will be only 5 million barrels less than the 101 in 2019.
Uh,
So the prospects are very good for the oil industry.
Dr. Salameh, you said one thing that China's oil consumption is pretty healthy at the moment, but given the industrial activity, uh, it would be definitely hit. Like it's a bit hard to believe that the industrial activity would be at the same level. Are you, or is this an indicator of a good midstream infrastructure? What China is having, is it storing oil? It has better infrastructure capabilities to store the oil, which is largely like midstream has always been a foster child of the petroleum industry.
That's true, but let me explain to you. We were led to believe by analysts in the global oil industry that during the first half of this year, when the coronavirus was at its peak, that China was not able to import oil, and that's why they said there was more than 20% less demand by China compared during the same period in 2019. Now, with the opening of the global economy, we know that there were exaggerations in their estimates and some erroneous projections. Now we know that China never stopped importing oil even during the worst period of the coronavirus in the first half of this year. However, what it has been doing is receiving shipments, but because of limited storage, these shipments remained on board tankers. Some of them were offloaded. And of course, China was buying not only for its own needs, but for its strategic reserves, taking advantage of the collapse of oil prices.
Absolutely.
Why pay $70 a barrel when you can buy it at 20?
Absolutely.
So they
And
bought and bought and bought and bought.
Dr. Salameh, if you can validate my point, what I said, that the midstream is often the most neglected one, and that too, when I'm saying midstream, I mean the storage thing. Midstream is mostly considered as that VLCCs are going across the ocean, they are taking oil, or there is a trans energy pipeline. But what about the storage? Because I know it involves a lot of infrastructure cost, a lot of balance sheet exposure. But do you think like this is the time when we miss that sorely, as
Yes,
what you said China is doing?
let me clarify one thing. Midstream here we are talking about oil on tankers and storage.
Yes.
Storage was getting less and less, was shrinking because so much oil has been produced that it cannot be sold.
Yes.
Consequently, you have to store it. That, that's why there was a great demand for tankers to store oil on it. As we have seen with Saudi oil exported to America, there are more than 19 huge tankers fully laden with oil waiting to be offloaded. But what happened? America didn't have much
So
storage.
are
And
you
the reason,
say that are
the
you trying to
reason,
say that the VLCCs or the ULCCs crude carriers are also doubling as a storage facility on the sea?
exactly that. And that's why President Trump offered shale oil producers some place to store the excess oil they cannot sell or they cannot export in their strategic reserves caves. And of course, as a manifestation of lack of storage, the collapse of the WTI prices into minus zero. In
Yes,
fact, it went to around minus 40 for that,
exactly.
which was a manifestation of lack of storage and also lack of ability to sell inside America or to export.
Dr. Salama, you raised a very important and interesting point on shale oil. Now, shale is considered as that that shale is a completely different, so to say, still unexplored oil reserve. Shale is also considered as not a friend of crude. Like its role is much to batter the Brent market, the general crude market. How do you see shale positioning itself in Corona? And as we go further and we talk of green energy and things like that, would shale be the next oil reserve which is yet to be explored?
Well, let me first point out or clarify one thing. The shale oil revolution enabled America to become self-sufficient in natural gas and to become the biggest producer, not the biggest exporter, because the biggest exporter is Russia. It also enabled America to reduce its huge dependence on imported oil.
From OPEC.
Before 2008, yes, the inception of the shale oil revolution and industry, America used to import between 13 and 14 million barrels. That, because of the increased production in shale oil, they have managed to reduce that to around 8 to 9 million barrels. However, the figures the U.S. Energy Information Administration's gives about shale oil production and United States production are very highly hyped, excited.
Okay.
Why? Just to give the impression that America now is the largest producer of oil in the world, followed by Russia and Saudi Arabia, and that America has a say in the making of oil prices and in the influence on the global oil market. However, that's a different issue because I have done a lot of research and I believe very strongly that whatever the EIA was telling us about US oil production includes more than 4 million barrels which are not oil. They are gases which or liquid gases which don't qualify as crude and they are not sold as crude, and if they are not sold as crude then they are not crude.
Okay.
That's one thing. Now, what effect did the coronavirus have on the shale oil production?
I'm very
I
interested
said,
to hear that.
I said that the oil industry was the biggest industry, the most hit by the coronavirus. But within the global oil industry, the shale oil production was the worst hit.
Yes.
Until yesterday, I was finishing some research which leads me to believe that shale oil production has lost. They used to claim up to January that they are producing, the US production is 13 million barrels a day.
Absolutely.
Now, even based on that, my research shows that shale and US oil production has lost between January and now 6.4 million barrels. So the US oil industry, of which shale has the lion's share, will be struggling this year and the following years to produce even between 6 and 8 million barrels, which is a very important bullish factor supporting prices now.
Uh, so Dr. Salameh, a general question would be that given right now we have pressure, margin pressures on all three of them, upstream, midstream, and downstream. Upstream, you said about shale. So upstream margin pressure is there. So if you have a choice of doing a deep sea rigging or on the land exploration or the shale, so out of three, what would be your preference as far as the economics is concerned, as far as the financial brain goes, preference goes?
That is a very good question because upstream, you are talking about exploration and producing oil. Now, we will judge the profitability by comparing the production cost of a barrel of oil. For shale oil, it ranges, the break-even price ranges from 48 to around $70 a barrel. That's one. Compare that with the Gulf region. Take Saudi Arabia, for instance. It needs between 2.8 to $3 a barrel. Compare it with Russia, which is the biggest oil producer. It is $2.5. Why? Why? Because the Russian oil industry gets hard currency, dollars, euro, yen, when it exports its oil, but it pays for its services, domestic services, in the ruble. And the ruble has collapsed against the dollar. So they are making a huge profit. For instance, listing costs for a Russian barrel are cheaper than the listing cost of Aramco's or Saudi Arabia.
Yes.
So if I am going to explore for oil, I would go for the cheapest where I make the largest profit. I maximize my profits. So I go to Russia, invest in Russia or in the Gulf, in Saudi Arabia, UAE, Kuwait, Bahrain, Iraq, which is the future giant of oil.
You
That's
mean
what I will.
you mean
However, the American government will not permit shale oil industry to die because that industry employs 2% of the workforce in America, and it is worth between 8 and 10 trillion dollars, and geopolitically it enables the United States to have a say in the global oil market along Saudi Arabia and Russia.
Yes, and to your point, like that is why we see KNPC or ADNOC or Saudi Aramco becoming bigger and more powerful because
Of,
of the
of course,
economic
of course,
traction.
of course.
Uh, Dr. Salama, one thing I wanted to know that in now that in Corona crisis, imagine you are the CFO or you are the finance person. What are the extra sandbags? What are the sandbags which we need to cut out in order to bring down the cost structure? Like one of the things which I see whenever we are transporting oil across the Persian Gulf or wherever, we have huge insurance cost over the crude carriers. I know the environmental concerns in case of a spill, but just by having insurance, you are not doing away with the environmental concerns in case of spill. So just like I said, insurance, what are the things which can be, cut away or done away or reduced to reduce the pressure on the oil cost to the refiners?
Yeah, many things the oil industry is doing. They lost huge amounts. You are talking trillions of dollars. And of course, part of their problem, even before the coronavirus, is that they continued to pay generous dividends. But they were borrowing to pay the dividends. Now, Shell of Norway and BP have decided that the time has come to cut the dividends drastically so as to reduce their outstanding debts. Another measure they are taking is a write down of assets. Like they had, because they are super majors, they had huge assets from gas to oil to renewable to everything.
True.
So they have decided assets which are not very profitable can be written down. And that's what they are doing. Furthermore, they are trying to burnish their environmental credentials by talking about zero emissions. That's an illusion. There is no zero emissions because oil will be with you, and I explain this later further. It will be us all through the 21st century and probably far beyond. So in doing that, the oil industry is cutting a huge amount of investment. There an estimated $131 billion of projects in oil and gas, which were supposed to have been approved this year, have been shelved maybe indefinitely.
My point, Salameh, is not on cutting the investment, but cutting the sandbags. So to say, I won't be happy if a company goes down and closes an upstream oil exploration site. No. What I'm interested that what are the ones which are unnecessarily burdening the cost structure of a barrel of
that's what I answered, is that by cutting their dividends, they are reducing the amount of money they have to borrow to honor their dividends to their shareholders. And then by writing down a huge amount of assets, they are reducing their size. And of course, reducing the tax inflicted on them. And when you and of course, they have always been very efficient, the oil industry, most efficient industry in the world, and that's why it's very profitable. So they could hardly reduce cost of production, although they always try to do it. But what they are, where they can cut costs, like cutting dividends and borrowing, they are doing that. In doing that, they will emerge far smaller and leaner from the coronavirus, but they would have learned one lesson, that to focus the diminishing revenue they have on what maintains their sustainability, which is the oil and gas business. And that's why oil and gas will remain the core business of the global oil industry well into the future.
So to quote Professor Paul Samuelson, I remember my B school days of economics. So what he said, oil is an inelastic commodity. So Samuelson was right.
Well, that's absolutely right. And I add one thing which I invented, and that came to me during the coronavirus. When the global market started to ease up, I reached the conclusion that, if anything, the coronavirus has irrevocably proven is the organic link between the global economy and oil. Destroy one, you destroy the other, and vice versa.
True.
Furthermore, and I add this also, I coined it myself, that there is no oil, there is no global economy and no civilization as we know it and enjoy it without oil, and vice versa. The global economy runs on oil and, of course, gas for electricity generation. but it runs mainly on oil for global transport. And therefore, without oil, there is no global economy. So, as a result, if I am going to look and assess the energy scene in come, I come with the conclusion that first, there is no post-oil era throughout the 21st century and probably further beyond. Second, there will be no peak oil demand. Third, the talk about zero emissions and immediate global energy transmission from oil and gas to renewables are illusions. And the fourth one is that oil and gas will remain the core business of the global industry and therefore the global economy well into the future.
Your words would be music to ears of all the oil executives seeing my video, and of course for the green energy advocates, it would be a challenge to up the game and to come as like close and keep up in their innovation to the
If,
oil.
if, if you permit me, I'll comment on the renewables.
Sure.
Renewables, particularly solar power, is the ultimate power eventually for the universe. However, solar power generates electricity, does not drive cars. That's
Yes.
one thing. And for electricity generation, we have so many alternatives now. We have hydro, we have wind, we have nuclear power, we have oil, we have gas, we have all these renewables coming into it, geothermal, you name it, and it is there. So we have many options, but solar power will be the ultimate. When it comes to global transport system, there is nothing. What they are talking, and the media have fallen in love with the electric vehicles. But the electric vehicles don't compare to conventional
So there is
cars
this is
or
an area of
ICE.
opportunity for innovation.
Yeah, uh, despite the advance of technology in the battery and the EVs, also the ICEs, the internal combustion engines, are also benefiting from the technology. They are becoming far more environmentally friendly, and they are far more capable of satisfying customers around the world. And to give you an example, today we have 1.5 billion vehicles in the world. How much of that are EVs? Less
Well,
than
yeah,
4 million. Furthermore, even if, as other analysts are claiming, even if we have 100 million EVs on the roads by 2040, how much from the oil demand it will reduce? Less than 3 million out of 117 by then, million barrels a day.
great
So
observation.
it's a long way to go. And
Yes,
I said technology is not limited to EVs. Technology is open to ICEs as well.
absolutely. I really like your advocacy, your strong advocacy for oil as a way forward as we go. So then, in that situation, Corona is just a blip, as if I understand correct from you. And we are now, Professor Salama, we are in a situation to 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 see that how the oil consumption would go further, as you're saying that it would remain an inelastic commodity irrespectively. Any uh, any
We are
yeah, please go ahead.
we are gradually returning to pre-corona levels. The global economy will or global oil demand will achieve the levels of 2019 by the end of 2021. We will end this year 5 million barrels short of the 2019 level. So by the end of 2021, we would have gone back to the levels it were. But prices, and I am projecting them, that between now and the end of the year, prices are projected to reach between 45 to 50 a barrel, hitting 60 early 2021. But
Okay.
beyond that, within 2023 and 2022, the next 2 years, prices could hit $100. You know
Awesome.
why? Because of the collapse of global investment in the oil industry.
Oh,
It will create a huge supply deficit. I estimated between 10 to 15
that's a
million barrels a day.
that's a very powerful remark, Professor Salameh. Now I'm approaching the end of our interview. So, any closing remarks you have for this situation and oil in general?
Oil, the global economy will soon forget about the coronavirus. It will be a footnote in history because soon we'll have vaccines. That's the optimistic view. Another thing, oil will continue to rule supreme in the global economy. But having said that, renewables have a place, and renewables should compete along oil and other sources of energy for a share in the market, not as the militant environmental activists and the oil and gas asset divestment campaigners are telling us, drop everything, forget about oil, and let's go for renewable. In doing that, they are returning us to pre-industrial era. And that nobody wants, neither you nor me.
Well, that'll be all. And thank you so much, Professor Salameh, for your time. It was such a pleasure and hearing things right from the horse's mouth. Uh,
And I know you very well, and the horse is a noble horse, noble animal.
Thank you, sir.
Thank you.